Hello and welcome to BQ Prime. I have Angshu Mallick, the Managing Director and CEO of Adani Wilmar Limited, to discuss how 2022 has been for the company and the FMCG industry at large, and also the outlook for 2023. Thank you for joining in, Mr. Mallick, and greetings of the season to you. I would like to begin by asking how the year has been for Adani Wilmar.
See, the year 22 has been historic. We have completed 22 years in existence of this JV, which is a unique 50-50 JV. But we went for the IPO in February. And that is why it is historic, because we went public. And as you all know, the public response, investors' response has been very good. Now, the story of food, if you ask me, we have been able to explain it better to the investors, and we have showcased why food is so important to India. Now, we have always stood by our belief that good food is good staples, because when we talk of food, generally processed foods come to our mind, but it is the basic food, that is rice, wheat, dal, sugar, pulses, all these products that we eat daily needs to be hygiene. It has to be pure in quality. It has to be of the best standards that we all know. And it has to be packed and delivered to the consumer at the most value for money. Now, because that is what constitutes our daily food. Now, we have been talking about it because we know about edible oil, that how this market has changed from predominantly loose oil, 80% loose when we started the business, to today hardly 25% loose, 75% is packed. Now, obviously, this journey of 20 years, we have learned how consumers stick to brand and why consumers prefer brands and packed oil to loose oil. Obviously, loose oil is cheaper, but consumers know that when you want to pay something for better health, you pay something premium, and that is not something great. But Indian consumers seek value for money, and that is very true. So I think Adani Wilmar has learned and has showcased why food is so critical to the entire country.
Right, sir. So how is the current consumption pattern looking like? Are we seeing an increase in volumes, especially after the festive season? We have seen some kind of slowdown. So how is it panning out right now?
See, if you look at the total volume, our rice business have grown by more than 35-40%. We have improved our exports, and we have improved our domestic consumption. Rice, which was earlier consumed more loose, slowly consumers are buying packed, both basmati and non-basmati. Then you go to wheat flour. Wheat flour last 2 years did not grow well. Before that, it was growing at around 18%. This year, I think it should grow at more than 20%. We are growing at around 40%. And that is because, one, the brand equity fortune, two, nationwide coverage, third, which is more important, is that the GST on all brands. So that has given us a level playing field, and brands like us have surely gained out of it. So we have done well there. Besan has grown by more than 30% this year. Sugar, we are growing at around 20% plus. Okay. Branded packed food, we have grown average 35-40%. Edible oil, we are growing, packed oil is growing at around 10%, 8 to 10%. Now, edible oil last year did not grow because of the high prices and the inflationary pressure. But this year, after the prices got corrected from June, July, things have become better, and we are seeing increased consumption of branded packed oil. So overall, if you see the food basket, surely each category is growing at different speed, but all of them are growing.
Okay, so what is the outlook in terms of your margins? You spoke of this reduction in raw material prices. If this is likely to sustain, when do you think we can see normalized margins again?
See, the margin pressures are always there on any brand when the commodity prices goes beyond a level that you can think of. Last year it did happen like that. This year the market fell from a very high, from $2,000 to almost $1,100, $1,200. So obviously the pressure of margin was there earlier, but now with this type of prices, surely brands like us, which perform consistently at a stable prices, so we are sure we'll do well, and the margins pressure has reduced, I would say, drastically, much within control.
Okay. Also, the cooling off in commodity prices in the last few months has created hope of more price cuts. Will you be taking further price cuts, both for edible oil as well as the food business?
See, the rice prices have gone up. Rice has firmed up in the last 1 month, both basmati and non-basmati. Wheat, as you know, the prices have firmed up in the last 2-3 months, and it's ruling all-time high. So there we can't do one. Only besan is much lower than last year, because chana is still at a lower MSP lower than MSP. So obviously chana is low, so besan is low. When it comes to edible oil is not moving as per supply demand. The prices are not going by supply demand. It is becoming more technical in nature. When I say technical, the other factors are becoming more important, like the geopolitical issues, the foreign exchange issues, and the biodiesel mandate, which each government is now announcing. So that impacts the edible oil prices. So I think present prices are stable. It has come down from the top, and consumers are accepting it. We see good demand at these prices. So I don't think the prices is likely to go down because it's more technical in nature. We feel these are comfortable prices.
Okay. And so rural market, it forms a material part of revenues for FMCG companies in India, but the demand has been pretty weak so far. Are we seeing any green shoots of recovery in terms of rural demand?
See, rural business, population-wise, it is almost 65%. Business-wise, it's almost 35%. As far as edible oil is concerned, and around 25% or 28% for food, packed food. Now, we all know that the inflation has been a matter of concern. It has impacted rural more than urban. That is what I think so. Our study says that in urban, people have used their savings to overcome consumption. They have diverted luxury to essential. So they have gone with essential and they have continued. So consumption of food and edible oil in urban hasn't been so much impacted as much as it has happened in rural. But going forward, what we see is that after a good crop in Kharif crop, the farmers have started getting some money from November, December onwards. January, they have started sowing wheat. As you know, almost 30% increase in acreage. In mustard, it is more than 10% acreage. So all this is an indication that the coming Rabi crop is going to be fantastic. Now, if weather supports and if there is some amount of drizzle in now onwards till at least mid-January, I can tell you the crop will be fantastic. And that will give a lot of money to the farmers. That will add to their income. And after that, I think the inflation will come down, consumption will increase, and rural will go up. So I am very hopeful that come January onwards, things should be better for rural.
All right, sir. So also, given that you are transitioning from an oil company to an FMCG company, what is your strategy to increase the market share? If you can just elaborate on that a little bit.
See, we started with a market share of almost 4% in wheat flour. Now, 4% is a very small market share. So we have started pushing and we are growing fast. I can tell you that we will reach double digit in a matter of years' time. That means we'll double our volumes, surely. There's no doubt about it. In rice, our market share has gone up. With acquisition of Kohinoor, we are now at around 15%. So I think that will grow. Edible oil, we are at around 19-20%. So we have been growing on that. But in edible oil, even 1% is huge in terms of volume wise. It becomes big. So
Mhm.
we are working on that, and I'm confident because we have shown 0.2% increase so far. So I think going forward, we should do better. So market share is going to go up in all our categories where we are, and uh, we are very watchful of it, let me tell you, and we watch it very carefully. So increase in distribution, increase in rural reach, increase in number of retail outlets that we are covering. So 5,500 distributors, we are now covering almost 6 lakh direct retailers out of 1.6 million outlets. So coverage is going to be important. And
Right.
India is a vast country. So you need to be present in every part of the country.
Right. So having said that, there is a lot of competition in the market. And now, as you know, that Reliance also is foraying into the space with its own brand independence. What kind of challenges do you expect ahead of you? And also, how do you plan to take on the competition?
See, in any segment, you need 3, 4 good brands to compete and participate because there is always a room for 3, 4 brands. If you see staples, national play, you won't recall more than a couple of brands. And not everyone is available in all the range. So we are happy to have competition, one. Competition also brings in you some amount of, speed and agility. That is good because without a competition, you become lazy, I would say. So I would say it's good to have competition. Good competitors brings in better efficiency and brings out the man in us. It's something that will bring out our strengths areas. So I think it is good for the company, good for the country also to have good brands available to the consumers.
Right, sir. So, in our past conversations, you have mentioned about Adani Wilmar concentrating on developing its food basket via acquisitions. Have you already evaluated few categories that you would like to enter, and what kind of assets are you looking at?
See, it can be an asset, it can be a brand, and it can be a company. So we always look at any opportunity that is there available, or there is some synergy with that. And it's not a time bound, it's not something that in 2 months we have to do something. It's an ongoing project. There's a team which keeps on scrutinizing, discussing, and probing and doing some research. So this happens, and I'm sure we will come with more acquisitions as we go ahead because in India, acquisition is one way to improve your sales volume much faster.
Okay, but is there any categories that you have already finalized?
Anything that is used in the kitchen for cooking.
Okay, sir. So my last question to you, we know that Adani Wilmar shares are one of the multi-bagger stocks that the Indian market has produced in 2022. As we enter the new year, what's your outlook for Q4 in terms of the FMCG industry, and how should shareholders and investors understand this scenario for Adani Wilmar?
Q4 is Jan, Feb, March.
Yes.
Normally, Jan, Feb, March are big months. One, consumption from the marriage. Two, Holi. So rural India, UP, Bihar are big markets. For Adani Wilmar also, these are our strong markets. And we have always seen the Q4 to be one of the best in terms of consumption because it has the winter, it has all the seasons. Second, the harvest is around the corner. So there is a lot of euphoria, there is a lot of good feeling in the rural market. So as every Q4, this year also I am expecting to do well. Market prices have now under control. Unlike last year when it went up because of the Ukraine war, this year the markets are steady. So consumption is there. And third is that overall, there is positivity. Not last year, there was some amount of skepticalness and people were uncertain. This time, I find consumption is good. People are confident. People are moving out. They are going and enjoying. We have seen in Christmas, no hotels are available. All the choco blocks, all the tourist destinations. So these are indications that people are coming out and enjoying. And that is what will keep the going momentum up.
All right. Thank you so much for joining us at BQ Prime, sir.
Thank you, Srisha. Thank you.